Hello traders at CMC Markets. Welcome to another update from Trevor Neil of RRG Research. This update is being prepared on the morning of Friday, the 9th of February. Let's start with looking at a relative rotation graph of asset classes. The sampling here is weekly, and there's a continuation of the same theme, I would say, generally at the moment. So we've got commodities really in this lagging quadrant. It's looking terrible. Also, dollar, so weakened dollar. Emerging markets, still too early to start looking at emerging markets. Then gold as well, which has gone from the leading quadrant through the weakening quadrant and is now in the lagging quadrant. In the leading quadrant, we've got furthest to the right and pointing in a good northeasterly direction is the QQQ, then the Nasdaq if you like, also the S&P, small caps just coming down a little bit in here now, and then we've got the bonds really around the middle, having moved from over here to around the middle, so improved in terms of their prospects, but still the big game is equities, US equities, here is Europe. Here coming tail down, pointing towards the weakening quadrant. But we've got strong message from the US markets, in particular the QQQ. The European markets are a bit of a mixed bag, but we'll come to that shortly. Let's start with the ugly, the Footsie. So Footsie is ranging, really it has done since July. Wide range down from the bottom here to 7,235 up to the top here 7,737, although we did poke through to 7,762. You can see that the moving averages here, the 50 and the 200, just crossing up here but very close together. That's generated because we've had an extended period of moving sideways. The MACD is close to its zero line. It's a neutral message. The RSI is at 48, nearly 50%. That's a neutral message. It's neutral. It's a drag on the whole complex, really. Stock markets as a whole, as we see from the RRG versus the MSCI World, we see that the Footsie is a good one to pair off against because it just is static while everything else is rising. Now this is the daily chart of the DAX, and this might be the most exciting chart we're looking at today. We've got a horizontal top going across here, basically at 17,000, the big round number. We've got rising lows. We could do that a couple of ways, but we've got rising lows, so every time there's a sell-off, it bounces from higher levels. We've got the support of the previous high here, so this is all taking place having broken to a previous high, retested it and moved up. The moving averages here, the 50 and the 200, the gap is widening. The background is long-term bull market. The MACD is neutral, reflecting what is actually going on here, and the RSI is climbing. And I think that this is close to making a positive breakout. So I think the correction is really over for this and it's ready to go. The CAC, incidentally, is a very similar chart, so you could choose one or the other of those. Now we've moved to the Dow Jones Industrial Average, which is soaring away in new highs. We have got, let's take different scenarios. You might have used this dip here as your rebuy opportunity. The trend is strongly up, the 50 and the 200, the gap is widening here, so this reflects the long-term picture here. The MACD is positive, has turned positive again. It did so here. And then the RSI corrected down to, which the level I like is below 50, and then turns up again in a strong trend, giving this the dip to buy on completed. So once it came up through 50, that's on this bar here, in fact, then that was the rebuy level in the uptrend. Then break to new high, retest, that's another potential buy level, and we're on our way up now. We're not overextended. However, we are losing a bit of momentum. Let me draw in what I mean by that here. Two messages from this. If we stay below this and actually the RSI turns down, even if the price is flat or rising, I think we're in danger of putting in an intermediate top. If we break this line, we're in danger of accelerating. This is quite an important line. Okay, moving from the Dow to the S&P, which is roaring away. Nice uptrend line there, nice break to new highs, breaking through the 2022 highs, and looking very strong. Look at the angle of this here. We see the 50 and the 200, the gap widening here. It's a strong move with from a long-term perspective, increasing momentum. We are at this moment making new highs. The MACD is positive, but it is below that high there. High, higher high, lower high. So there is potential for a bearish divergence. So we have to turn down. We would be looking for this to cross its signal line, then we'd high and lower high, as long as that occurs below this reading up here. So watch out for that. It's an extended move. It doesn't go on forever. We get a similar message from the RSI as well. Let me draw this line in to make it clear to you. High, lower high, high, higher high, high, higher high, high, even lower high. So we're looking mature in this move, although at this moment it's looking strong. That's it for today. I thank you all very much indeed for attending. I hope you do find this useful. This is Trevor Neil of RRG Research, wishing you a great weekend, and may the trend be with you. Goodbye.